The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome to Tax Talk for You, man. It's a great week. We actually got some rain on the ranch, and we're still behind quite a bit. So we're in a major drought area here, just outside of Houston. And but we got rain. In our life, things are never busy enough between doing taxes and bookkeeping for truckers and IRS representation, and with the ranch. And then what happens? My wife decides that she needs another puppy. Yep. So busy with a new puppy. Great part about this puppy, it's a beautiful yellow lab. We got her with breeding rights. We're going to get back into breeding labs again. So, we'll be looking forward to that over the next year or so when she becomes of age, getting back into doing some breeding for wonderful show labs and working labs, hunting labs and stuff. So it'll be a lot of fun. Can never get enough of doing work at the ranch while you're trying to do everything else in life. Keeps things fun. But you're not here to talk about puppies and labs and stuff. You're here to hear about IRS audits, because those are fun, right? No, not at all. IRS audits are never fun. They're not easy. But the good news is, IRS audit rates have actually declined significantly since 2010 due to staffing shortages and changes in the way the government does things. Now, you may get a letter, from the IRS that says, hey, maybe you missed something. So they do have a lot of automated programs that will be like automated under reporter program to detect discrepancies in reported income to the third party reports like W-2s, 1099s, 1099Rs, 1099 NECs, miscellaneous. And so all that stuff does get matched. So you may get an underreporting program, but the likelihood of getting audited had actually gone down. So if you're looking at what are the current rates based on recent data, if you're over $10 million earner, hey, if you are, congratulations. Okay. You're going to have the highest audit rate. Some of these rates exceed 8 to 11%. So if you're in that $10 million range, hey, you have a very high chance of getting audited. If you're in the million to 10 million, again, congratulations, man. Great way to earn a lot of money. Your audit rates are 1 to 2.3%. Hey, not bad chances of being audited, far less than if you're over the 10 million mark. And I guarantee you, if you're over the 10 million and you're getting audited, get somebody to work with you and be on your side to help you through the audit. If you're making between 200,000 and 1 million, audit rates are generally higher than average. You're closer to 1 to 4%. So still not great odds, but actually a little bit higher than if you're in million to 10 million. If you're under $25,000 with earned income tax credits, your audit rates are disproportionately high. It's 0.78 to 1.2%, often due to automated scrutiny of the earned income tax credit. So if you're taking this credit and you don't deserve the credit, maybe you're claiming kids that aren't really yours, then you're going to have disproportionately higher rates of chances of being audited. Overall, those audit rates are extremely low, roughly at 0.2% to 0.3%. So, are you taking your chance when it comes down to it? Yeah, you could be taking a chance, but you got to remember that there are some red flags, and we're going to go through those red flags here in a little bit as well. Some of the key audit factors and trends for the IRS, they focus on higher income. Despite lower overall numbers of people that are in that higher income, the IRS has started a focus on auditing high income non-compliance. So they're looking for more money. Where can they get more money? So they're going after those higher income people thinking, hey, you're going to go out there and do it. If you're in that $200,000 to $1 million range, it means probably you're doing some self-employment possibly. And, if you're in that self-employment area, they're going to be looking at you as well because they think, you lie, cheat, and steal from them because everything's their money, right? That's right. They put the focus also on that earned income tax credit because, they think those low income earners are fudging, what they could be taking or should be taking. There's a lot of unscrupulous preparers out there that will help people qualify for this earned income tax credit. Maybe they put a business in there that shows them losing money so they can qualify, and they never had a business. There's a lot of different things people do that affect the calculation for earned income tax credits. So you kind of got to watch who your preparer is as well, so that the focus doesn't end up on you unnecessarily. Complexity. So how complex your returns are increases your risk. So high income often means more complex returns, business income, investments, partnerships, which will increase the likelihood of being audited. So you kind of got to watch, what is going on. And if you are getting audited, get help. I don't think that you really want to go through the audit itself. So those are some of the things that you want to be looking at. Now, when the IRS audits your business, and we're going to talk a little bit about business audits now, you need to be organized. You need to have comprehensive records for that tax year. The tax year they're going through and doing the audit, specifically supporting documents like receipts, canceled checks, invoices that will help you prove income and expenses. The IRS requires that you justify every deduction with basically 3 elements: proof of purchase, payment, business purpose. So you're going to be gathering documents, your audit letter and information document request, which is their IDR. They're going to detail exactly what the IRS is questioning, specific areas on your tax return, specific categories on your tax return, and what specific documents they're going to want. So, first off, they're going to ask for every bank statement for that year, for every bank account. So if you have multiple bank accounts in the business, they're going to ask for all of those records. Now, if they're auditing your business and they start asking you for your personal tax returns, and you can tell them no. and withhold those, because if everything goes through the business account, then there is absolutely zero need for your personal bank statements to go out there. Now, if they expand the audit to audit you as well, then they're going to ask for those personal bank statements. And this is just kind of why good representation can try to mitigate how far they expand this audit by having somebody that's on your side working with you and for you to represent this audit. And if you need audit representation, taxationsolutions.net. We are the problem solver for IRS problems, whether it's tax, debts, audits, or whatever. Give us a call, 888-930-1016. Again, 888-930-1016. Get the help you need. So they're also going to be asking for copies of your business return, and they could be asking for your personal return. Again, if this is a business audit, don't give them anything they don't have to have, and know how to represent and get representation so that you're not giving them records that they should not be seeing. Financial records, income statements, bank, credit card statements, like we said. They're going to ask for your general ledger as well, which is the full detail behind all the accounts that are there. A lot of times, if you're using QuickBooks or something, they're going to ask for a copy of QuickBooks or have access to it so they can get in and manipulate the data and see what's going on and where to look. They're going to ask for receipts and invoices, detailed documentation for expenses, specifically for travel, meals, and large purchases. There's a lot of things that the IRS is going to ask for. We're going to continue going through some of these things and some essential tips for you right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
It's crazy. IRS goes through an audit and it is document. I mean, that's what the IRS is looking for, documents to support what you've put on your tax return and taken as a deduction. And, so they're looking for records so that they can reconstruct or deconstruct what you have taken as a deduction, and how can they get more money out of you. And that's saying you don't have support for the numbers and the information you've provided in the tax return. So they start looking for things, of course, like receipts and invoices, detailed documentation for your expenses. And it's going to be large purchases. It's going to be maybe what's in meals, what's in travel, what's in other expenses, or if you had miscellaneous, what was in miscellaneous. They will be looking for the larger type of deductions that you're there. If you've done mileage, they're going to be looking for your mileage log and looking at your appointment books. So those are the kind of things that they're going to be doing. They're going to be looking at your legal documents, your contracts, your loan agreements, business licenses. And if you've got a loan to owner or something, they're going to be looking for that legal document and how you're going to pay that loan to owner back. They're going to be looking at payroll, your W-2s. Then they're also going to turn around and look at your contractors, who you're paying 1099. what they're looking for there is people that should actually be employees versus contractors. So remember that. And they're going to go through their detail of, hey, is this person classified correctly? Because if you get it wrong, they're going to hit you with the payroll taxes that should have been paid for those employees that you classified as contractors. So make sure you're doing this correctly. Also, they're going to be now looking for those that you've hired that are illegal. So you've been paying somebody cash and not filing 1099s, or filing 1099s under the wrong Social Security number or bad Social Security number. They're going to be looking at those documents as well. So you want to make sure that you're doing things the right way. Document, document, document. Now, some essential tips. First off, don't send them originals. They are known to lose them. Provide only copies of documents. I suggest make sure you put it together in a nice, orderly fashion. Your bank statements by month, credit card statements, again, by month, so that they can look at what's going on in and out. Make sure you put your receipts in there and put it together by the category so that they can look at it and be able to see that your numbers are matching and here's the support. We suggest you hire representation. Even if it's not us, hire somebody to represent you. Hire a good enrolled agent, somebody that knows how to represent you and then how to work audits like Taxation Solutions does. Respond. If you don't respond to the IRS audit, you automatically lose. Yeah, you could appeal. Yeah, you can do offer reconsideration of your audit, but you automatically lose, and it's a lot more work to go back and reconstruct and redo the appeal because you didn't respond. That's on you. Okay. Typically, you're going to have 30 days to respond to the initial notice. Now, you can get extra time by calling the auditor and talking to them and asking for a little bit more time, provide them some of the documents that they need, but get the extra time you need to get the representation and have somebody help you so that you can gather the documents and put it together the right way. Don't volunteer extra info. Answer only what is asked. Now, we say concisely. So don't go on. You may be a great talker. You may be a great salesperson. You may just love just to chit chat. Don't. Answer the question. That's it. You don't need to volunteer any other information. If you can't find the records and you have lost records, reconstruct it. Receipts are missing, use bank statements and third-party records to prove your transactions. Make sure that you work to reconstruct that information so that you have support for what numbers you have on your tax return. Now, where does the IRS focus? Where do they put their attention? One of the things they're going to be looking for is unreported income. Yes, is there a discrepancy between what you deposited in your account and reported income? So the first thing they're going to do is total up all your deposits that went into your account. Now, if they might see transfers between accounts, they'll take those transfers out. If it's transfer to personal, they may not take that out. You would have to be able to support and justify that, hey, this money came in from your personal account and show that you put an influx of cash. So be prepared. If you take no cash in your business, you make no cash deposits, IRS could question that as well. I've seen them impute an amount for cash coming into a business. Or if you're cash intensive business, they're going to put high scrutiny on cash transactions. So they're going to be thinking that you've taken cash or not deposited all your cash. So there are some things that they're going to be looking for as well. Home office deductions. They have a strict requirement for exclusive and regular use of the home office. Now, lately it's been kind of a small thing, but hey, remember, if you're taking the home office deduction and you get audited, you've got to be able to support it. You got to be able to say, hey, I use this office as exclusively for business. I use it regularly for business. So, those are the kind of things that they're going to be going through. They're going to be looking at your vehicle expense. Did you keep a mileage log? Did you keep the mileage log the right way, beginning and ending odometer, where you went, how many miles? Did you not detail commute? Your first drive of the day, if you're working from home, is your commute. So maybe you stop at your P.O. box that's closer by, document it. And then you move on to your first client meeting or second client meeting, third client meeting, and then back home. And maybe it's back to the P.O. box and then home. So you're always checking the mail. So there's little things you got to do to make sure that you're getting your full write-off for vehicle expense. So make sure you're keeping that log. Keep a diary of your appointments as well. If you have to reconstruct it, they will give you the time to reconstruct that mileage log. We can ask for it. Hey, we got a diary. We missed some days. We've got to go back in and fix those, and we'll go through and do. Now, I'm going to tell you, if you are working a full-time job and have a part-time gig, and you're deducting an excess, a huge amount of mileage, IRS can also say it's unreasonable, even if you have a mileage log. Because how do you work a 40-hour job and then turn around and go to all these other jobs and have these unreasonable mileage? We've seen this happen. And we've seen the IRS refute it. Now, you might win in appeals like we did for our client that had way too many miles, according to the IRS auditor, but they had a nice detailed mileage log to prove their mileage. We won in appeals that, hey, they truly did this mileage for these clients to go see them and do this other work. And they were making plenty of money on side gigs, so they weren't necessarily there at the office 40 hours a week. They were actually working less and were able to get away and do other things as long as their job was done there. We were able to go back in and prove, those kind of things that, save the client quite a bit of money so that they could get the benefit of their mileage based on the true mileage log that they did have. So there's a lot of other things that were in their audit that they got nailed with that we were able to go back and prove. And one of them being home office, and they did a lot of home improvements for that home office. And the IRS did not like those deductions on there as well. But we were able to prove that she used this office exclusively for business. It was remodeled just for business. And she was able to get all her tax write-offs as well. So there's a lot of steps to prove that they were using this as their home office, and it was reasonable to take the deduction because of the exclusive use of that office just for business in that room. And we're going to come back. We're going to talk about some IRS red flags, and then we're going to get into truck stop bookkeeping. We always hear from our truckers out there about truck stop bookkeeping, and we're going to talk about how much you can learn from somebody at a truck stop that talks about their bookkeeping, and we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're going to be talking about some red flags. What throws up that red flag to get you audited or get your tax returns looked at by the IRS? Hey, one of the first ones and the biggest ones is failing to report all taxable income. Now, it doesn't always lead to an audit. And just because they send out a letter saying, hey, your numbers don't match, doesn't mean you were being audited and don't get counted in audit numbers for the IRS audit rates. So if you receive 1099 income that isn't yours or listing an incorrect amount, you reported the correct amount and theirs was wrong, you need to get the issuer to file a corrected 1099. Now, sometimes you set up an LLC and you're operating under the LLC, but you did not give the person you're working for the LLC's EIN number. You gave them Social Security number because you didn't know how to file. You fill out the W-9 to give it to them. So they got your Social Security number. Now, maybe that LLC is a S Corp or a partnership and income's reported over there, but the IRS is expecting the income to be reported on Schedule C. You're not going to get them to correct the 1099 because they issued the money to your name and not the LLC. Now, if they issued it to the LLC, you should be able to get it corrected. But if it came to your name, you basically could receive the money as the nominee. So you've got to show it properly on your Schedule C to make sure that the IRS doesn't come back and audit you and say you owe money on this. Now, you should also report all your income sources on your 1040, whether you received a Form 1099 or not. If you got paid for walking dogs, breeding dogs, tutoring, Uber, Lyft, piano lessons even, singing lessons, selling crafts at maybe a flea market, and it's all cash, you should be reporting your income. If you get audited, IRS is going to see that going through your bank statements that you deposited this money, and therefore you owe taxes on this money. But if you report it, even if it might be losses continually, you would still report it as hobby income, deduct up to expenses up to that hobby income. So it nets out to zero and you're done for the end of the day. Or if it has taxable income, you pay the tax on that and then you go from there. Making a lot of money increases your odds significantly as your income goes up, especially if you have business income. So, you got to remember that, hey, having a lot of money can cause you to be audited. Now, hey, I'm not saying you shouldn't make more money. Nobody wants to make less money. Everybody, as far as I know, wants to make millions, billions. Just got to remember that the more you make, the higher your chances of being audited. So be diligent in making sure you have the proper records, get bookkeeping so that you're getting every tax deduction you deserve and you're taking advantage of every tax break that's out there and every expense that you pay, and only paying income or self-employment tax on the correct amount. Don't over-report your net income. Non-filing. Hey, non-filing agency, IRS chases everybody that's non-filing these days, especially if you have 1099 income, W-2 only income. They probably have a little less worry about it unless they can see that you didn't have enough withholding. And then when the IRS does substitute for return, if you are a non-filer with business income 1099, self-employment is going to be based on your full 1099. They're not giving you deductions. They're not finding them for you. And it was your job, not the IRS's job. So, but they're trying to put an emphasis on those who received excess of income in excess of $100,000 or more. So, they're looking for you. They're looking for those people that didn't file that made quite a bit of money. Are you taking higher than average deductions? Taking those kind of deductions that are higher than average. And it's disproportionate to your income. And, they used to do lifestyle audits. You making money, but you're paying, let's say, a mortgage that is much higher than what your income is. They're seeing interest, or you're making charitable contributions, or things like that. And for your lifestyle, it's impossible that you could have made enough money to pay all this stuff. So how are you hiding it? How are you paying it? Are you taking more loans? Are you more in debt? What is the case? How did you make ends meet? And sometimes we've got to look at that. If you're taking, certain losses on investments and stuff like that, or rental houses, IRS might get a little curious. Want to look into it. You're taking deductions for bad debts. They'll look into that because it was a business bad debt. Worthless stock. Was it truly stock that was worthless? Did it get reported? Was it part of your 1099-B that you took this huge loss? If that is, probably fine. It's already supported. You got to look at those kind of things and say, does this make sense? The IRS is also looking at, fraud type things on earned income tax credit, refundable child tax credits, you claiming the right kids. Refundable credits, always something the IRS is concerned about. People ripping off the government to get the refundable portion of a tax credit, including, not just the child tax credit, but the American Opportunity Tax Credit, things like that can definitely set you up to be audited. So you're always looking at those kind of things because, it's money the government ends up giving you. Yes, it's in the tax code, but it's still considered government giving you money because you met these criteria. So you may have taken more than 4 years for the American Opportunities Credit. You may have omitted the taxpayer's school ID from the 8863. You may have taken the tax credit without receiving the form 1098T from the school, because the colleges are required to give you that if you've been enrolled in the school. And maybe even claiming multiple tax breaks for the same college expenses. So there's a lot of things that are out there. Now, maybe you're not taking the standard deduction. Maybe you've qualified to take the actual expenses. And so you may be claiming large charitable contributions. It's harder to get over that hurdle of the standard deduction. But when you do, some people will try to lie on how much their charitable contributions were. Charitable contributions are a great write-off if you're over the standard deduction, because it's worth that kind of money. You're going to save a lot based on your tax rate. And charitable contributions seems like an easy place. Oh, I gave cash. Prove it. That's what the IRS is going to say. Prove it. You gave to the church. Make sure you put it in the church envelope so you can get a statement from the church that you received this money. So there's little things like that you can do to make sure that you've got all the tax credits that you need. So there's a lot of things that the IRS is going to look at and do. Some things you may not have, some things you may do. It's going to trigger that red flag. I suggest that if you have a complicated return, make sure you're getting the tax help that you need, somebody preparing the return for you. So, that being said, if you're going through an audit, call Taxation Solutions at 888-930-1016. Again, 888-930-1016. Let us put the hurt on the IRS to save you from the dealing with the IRS auditor, which can be confrontational, which can be a pain in the rear end, and let somebody else deal with it so that you don't have to. All you got to do is help gather information to support this transactions that you reported on your tax return and get the best outcome you can get. Hey, we're going to take a short break, and when we come back, it's truckers. Trucker. What kind of bookkeeping do you need? How good is standing and talking to somebody at the fuel pump, talking about truck stop bookkeeping? We'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. The other day, I was meeting with some truckers and talking, and we were having a great conversation. And somebody told me, hey, I learned everything I needed to know from the guy next to me at the fuel pump years ago when I was standing there talking to him at the truck stop. Truck stop bookkeeping. You gained a lot of knowledge. Yes, everything's a write-off, isn't it? They were writing off what? Medical expenses. They were writing off everything and didn't pay a dime in taxes. Hey, does that make it right? Is that what the correct bookkeeping is? Hey, I met this guy at the fuel pump, and he says he hasn't paid a dime in taxes in over 20 years, and he's been doing trucking. Well, I'd like to see his return. A, he's either not working very much or continues to buy new equipment every year and has a huge depreciation write-off. I don't know exactly what the case is. Hey, but if he comes to us, we can review his tax return. Why don't you get a copy of his tax return so that we can actually prove what this guy was doing, and did he really not pay taxes, and did he do things correctly that is helping him avoid taxes? What is his true situation? So nobody really knows. But this trucker was working a lot. He was on the road constantly, had great gross revenues. Matter of fact, fuel costs were down. He didn't have depreciation on his equipment anymore. It had already been fully depreciated. And therefore, his tax rate was going to be a little bit higher because his net income was stronger. What could he have done? Yeah, he could have traded his truck in and got a new one. He would have reported income on his truck and taken depreciation on the new truck. But that's something he didn't do. He didn't need to do. It wasn't in his best interest to do. He had a fairly new piece of equipment. It just so happens that, hey, able to take either Section 179 or bonus depreciation in the first year. And taking that kind of depreciation meant that there wasn't much depreciation coming forward, if any at all. And therefore, his net income would have been higher for taxes than if he did the other. Now, we got into looking at his other returns because this guy was great at truck stop bookkeeping and truck stop taxes. Did it himself. Hey, he missed per diems. And because he was on the road so many days, there was a lot of money that he left on the table. I mean, that's if it's within the last year's, that's $80 a day that he was on the road, except for the first and last day, you get half day per diems. So, he missed out on huge deduction from taking the expense that you can take for per diems. He took travel meals, only totaled to about $3,000. He was very frugal, but he never got that deduction. He needed to go back and fix that. We were looking through there and found out that he was missing other common expenses for a truck driver. He didn't take his deductions for lumper. He didn't take his deductions when he bought chains. He missed deductions for his scale fees. So little deductions here and there that do mount up became really expensive for him. So sometimes, that bookkeeping you learn at the truck stop isn't the right bookkeeping you need. Maybe you need somebody like Trucker Tax Tools, the experts in the industry that know what's going on in trucking, to stay abreast of happenings within the trucking industry that is closely aligned with OOIDA, Owner Operator Independent Drivers Association, and works with other trucking associations around the country to help identify issues for truckers. Maintenance. Did you deduct your maintenance correctly? Not all maintenance is deducted 100% this year. Some of the maintenance that you do that improves the tractor or improves the trailer may have to be capitalized and depreciated. Did they tell you at that pump that you should be keeping your finances between business and personal separate? Did they tell you at that pump to open a dedicated business checking account and credit card to keep business and personal expenses distinct and separate? That's critical if you're going through an audit. Critical, as some of our lawyer friends say, to keep that protection of liability out there. Keeping that corporate veil intact, not commingling business and personal together into one account. Even if you are a DBA doing business as a sole proprietor, keep 2 separate checking accounts. Makes things cleaner. Log your maintenance. Keep accurate books. Your ELD device can be used to substantiate per diem driving expense claims. Keep a copy of those logs. Now, I know sometimes in those ELDs, they clear them out every 6 months. That means, hey, set a timetable to go in and request your log from your ELD to be able to substantiate your records for the IRS if they question per diems. Track your IFTA data. There are some specialized companies that will help you out there with your IFTA filings. Use them. Get them right. We've seen IFTA where you haven't been filing and you haven't done it quarterly, that the penalties from some of the states out there is drastic. So make sure you have somebody out there that's going to be able to help you with your IFTA data and IFTA reporting. That's your International Fuel Tax Agreement. So make sure you're getting your fuel tax reported correctly and paid correctly to the proper states, refunds from other states. So there's a lot of things you can do that helps you with this, but there's some specialized companies out there that can help you. We tell people, if you're going to do your own records, make sure you're reconciling your bank account every month. Make sure that, when you're doing that, you're matching your income and your expenses. Make sure that income is the gross amount of income, not the net amount coming in. So if you're leased on and have a settlement statement, it's the gross amount. It's the beginning amount, what they would have paid you if they didn't deduct all of the other expenses out of it. And then you detail the expenses out of every one of those settlement statements to get to the deposit that was there. But you're actually reporting the gross amount that you should have received, not the net amount. Your 1099 is going to be based on the gross amount. So your gross amount is before they take any deductions. So if you're using their fuel card, it's before they deduct the fuel expense. So you're going to report the gross, then you're going to report the expense of fuel expense. And if they're maybe leasing you a trailer or tractor, or you're running tolls through their fuel card or their pay card, they're going to deduct those things. Get those deductions for yourself as well. You're going to make sure that you're doing this. And then when we say match your bank statements, meaning check and make sure you got all your expenses recorded in there. Itemize them. Where should it be? Supplies, travel, meals, or meals and entertainment. Maybe you took somebody out to promote to get more business, or you have a co-owner and the two of you went out. You can deduct those business meals. Now, make sure you're recording those business meals separate from your travel meals, because travel meals will be substituted for the per diems. But your business meals will get the write-off of 50%, whereas your per diems are 80%. So you have a different deduction based on the kind of use of the money that you have going on. And then you're matching all your other expenses. So, hey, when you're going through and doing this, you got to make sure you're getting every expense that's out there. Now, our company, Trucker Tax Tools, which you can call us at 877-996-2477 or go to truckertaxtools.com. You can see we specialize in dealing and helping with truckers. We help them find every expense. We get it down to the lowest amount. We have what we call a tax minimizer, profit maximizer. Those two kind of run counter to each other. You got to maximize your profit, but you're minimizing the tax. So you're looking for every deduction. Sometimes those deductions can be small things that you've missed. Just this last week, we were talking with a bookkeeping client of ours, and we've asked them before for these other expenses. Hey, you should run this through your business account. What other expenses do you have? I don't have any. And we got into a detailed conversation about subscriptions he uses in the truck. And he went, oh yeah, I do that. So sometimes it's thinking about it in a little bit different way for it to make sense, so that you are finding every single deduction. Sometimes using software like Xero is a great way to go, especially if you're going to be doing it yourself. It's something you can run and gun on with yourself to get that information out there, and then being able to follow that through to get what you need. Making sure you're saving receipts. Now, when we're doing bookkeeping, we don't need all your receipts. We're looking for your big receipts, not your small ones. So, you need to make sure that you're running what you need and keeping support for what you're going. The best thing we can tell you is give us a call at Trucker Tax Tools. Let us save you the time, effort. Last thing you want to do is your own bookkeeping. When you're at home, you want to spend time with family. You don't want to be doing bookkeeping. So avoid it by calling us at 877-996-2477. Man, time flies when you're having fun. They just gave me a warning, man. We're about done. Hey, tune in every Monday at 9 a.m. Eastern time. We're right here at Tax Talk for You on W4CY Radio. Go to taxtalk4u.com. Follow us over there so you never miss an episode. Hey, but whatever you do, Have a God bless and glorious week, and we will see you right here at Tax Talk for You, 9 a.m., 10 a.m. Eastern Time, on W4CY Radio. See you next week. Have a God bless week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.